The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. I was out yesterday. Appreciate our man Basil Chapman filling in, and we're back in the saddle, and we got CPI data. We got the inflation rate. 2.6% is the number in terms of the annual inflation rate coming in for the consumer price index. And right now, we have yields pulling back a bit, but it's been quite a volatility. We have higher price, lower yield. There's your reaction on the 8:30 numbers. What are they saying? Well, the market's saying, you know what? We might get that quarter point cut in December. We got the 10-year right now at 4.38%. All right, we take a look at the daily. Yes, it's a bounce, but my goodness, right? That trend is pretty well intact. Lower lows, lower highs. We are getting a bounce on inflation data today, which is going to be important. We're coming into a new administration in January. Well, we got like 2 months. Yeah, January 20th. It's November 13th. We're coming into a new administration, and we're going to get to see what that's going to impact and yields. Keep your eye on it, but we get the CPI data, and this morning we got markets in a little bit positive territory. You see the bounce there at 8:30. Right, we're about 15 points higher from where we were. You were in negative territory in the markets barely. You got the S&Ps right now up by 7 points at 6,020. You see the spike in the NASDAQ 100. We give up some of it, but we're higher on the CPI numbers. You're positive by 5 points on the session, so barely in the positive. The Dow right now up by about 42 points or 0.1%, and the Russell with the biggest acceleration there. Now, I've talked about it before. The Russell, in terms of how much floating debt the Russell 2000 has compared to some of the big tech, big cap stocks, the Russell is much more prone, or should I say, much more open to yields when they have so much floating debt. And yeah, the Russell getting a pop on a little bit of a pullback in yields this morning, up to 24.22. Now, we talked about yields. How about the dollar? This was quite a run yesterday, up to 106, almost 20. We hit 106.20 on the dot today, and we've pulled back a bit to 105.86. So we have a little pullback in the dollar as we have a little bit stronger yield, a little bit less yield. Okay, so lower yield, weakened dollar. What's that going to do for gold? Well, it's going to give it a little bit of a lift. It's been quite an acceleration. Gold's hit 25.95 early yesterday. We come back and touch 2,600 almost on the dot. And gold a little bit higher on that 8:30 number, up to 26.19. We're going to be talking to our man Teddy Kegstad at 40 past the hour. Man, do we have enough to talk about, whether it's currencies, yields, commodities. You jump over to crude. Drill, baby, drill, 67.48. We'll see if rhetoric becomes reality. But yeah, I mean, check it out. Now, that's a while back, all right? But boy, that was a critical area, 72. It was an area of support, going back to where it bounced in August, where it bounced in June. Could that turn into an area of resistance? Is $72 a barrel an area of resistance? My goodness, right? Now, let's put it back to that 3-year weekly. Because, yeah, you talk about critical areas, right? I mean, draw that line. You have the acceleration of $62 at the end of 2021, but since then, whether it's a nice round number of $70, but even right where we are, all the tails line up almost right where we are, $67. Nonetheless, we got crude down 70 pennies this morning at 67.42, and we talked about yields. There's your 10-year, higher price, lower yield, 109.27. We were at 109.10, so you're up half a point right now to 4.38%. The yield is down about 6 basis points. You jump over to the 30-year. You're up at 117.03, up about a full point from where we were yesterday, pulling back. Just volatility, extreme volatility, and probably rightfully so. If anybody tells you they know exactly where yields are going to be, they could. But boy, make them explain it, because there's a lot of unknowns out there right now. There's a lot of unknowns. Right? What's the policy going to be on tariffs? How is that going to impact consumer prices? How is that going to translate to what the Fed can do? A lot of unknowns. You can make educated guesses. That's what we're in the market to do. But my goodness, you jump over to the dollar, as I mentioned, pulling back a bit at 105.87. We take a look at the longer term. There's a lot of action at critical areas. There's your dollar, okay? You don't have to be a master technician to look at that chart and say, you know what, we're bumping up against an area that is potentially resistance at about 106, right? That's where we were in the beginning of 2023. You got to as high as 107.34 at the end of 2023. You touched an area of 106.51 in April. You touched that area of 106.13 in June, and we are back up to that area after being all the way down at 100. There's your range. Okay, there it is. It's as clear as day. Doesn't mean it's going to hold, but at least you're at a nice critical area. We'll get to talk to Teddy Kegstad about that area when we talk to him at 40 past the hour. But yeah, that's just a shorter term time frame, but it is a period of about, 2 straight years we've been between 100 and 105. There's other nice areas on some of those currencies. And it's great to talk about Teddy. He breaks it down where it is. But check out the Euro-US dollar, right? Inverse of the dollar index, of course. But again, at a pretty critical area, about 106. The high end was about 112, and you're right back to that area. Now, there's more going on in the dollar, as we always talk about with Teddy, than just going on for the euro. But that's a huge component, and yeah, it's a pretty tight trading range in currencies. And currencies trade in momentum, right? And it's just been a 2-year chop of 106 to 112. And in the dollar index, you've had a 2-year chop between 100 and 106. Just inverse action of the euro. Now, there's contributing factors. We'll talk to Teddy, as I mentioned, about others, but it is interesting. Look at those areas, man. You break above there, that's going to be an interesting one. All right, we get into the numbers. Let's talk a little bit of CPI. We'll pull up the headline. Inflation rate hits 2.6% in October, basically in line with expectations. We had a 0.2% for the month. You multiply that times 12, we're at 2.4. I always say, man, why don't they give us 2 decimal points, right? Why doesn't the news give us 2 decimal points on those? It seems a little bit ridiculous that that's not the case. Excluding food and energy, on the core side, 0.3% for the month, 3.3% annually. Now, look at that chart, though. Look at that chart. Core is the dotted line. Are we going up? Are we going up on core since July? Maybe. Now, that doesn't mean that the Fed is stuck where they are right now, but it is going to get interesting if these numbers stay where they are. We got an uptick, okay, to 2.6 from 2.4 in September. I would say the trend overall, though, is still down, but that core, the core is stuck or going up since July. It's November, folks. Now, we just got the numbers for October, okay? But you hit 2.9% in July, and then you go 3.2, 3.3, 3.3. They want that number back at 2, right? So keep that one in mind as we go forward in terms of not potentially December, okay, but where we go in the months to come if those numbers are still stuck at a 2.6 to a 3%. Now, we'll break down some of the numbers and talking about CPI when we get back from the break. But how about this market, man? Basically just chopping at highs. We're sitting at that nice 6,000 number. We're sitting at 6,015 this morning. NASDAQ slightly in the red. We'll talk about some tech stocks when we get back. We'll take a look at Apple, take a look at Amazon, Microsoft, Tesla, and we'll talk some CPI. We'll break down those numbers. We'll talk some super core. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps positive by 2, and we're continuing to see higher price and lower yield right now. You got the 10-year up by 16 ticks, and yeah, we're pushing 110 right now, and that is quite a move when you talk about we're trading up almost 20 basis points, 20 ticks. And you're talking about a yield right now of 4.36%. Now, breaking down some of these CPI numbers, okay? This market was worried that we were going to have a real inflation problem again because these are still a little hot. All right, where do we go to? I mean, just check out the chart as I was talking about. Okay, the market's celebrating another cut coming in December when we have core CPI stuck at 3.3. Remember, folks, now the Fed's preferred gauge is the PCE, okay, the personal consumption expenditure. But CPI they watch, and they like core versus overall, because that's what they can influence with their policy. All right, food and energy, not as easy, but you take those out, and their yield, their overnight lending rate has more of an influence. That's what they follow. That's what they're trying to get a hold of, and that's at 3.3%. So yes, markets are now pricing in about an 80% chance that we're going to cut in December. Just yesterday, that was only a 60-40. Today, it's an 80-20. All right? And yeah, a week ago it was a 70-30, and a month ago it was an 85-15. Well, things have changed dramatically since October 11th, okay? But you see how volatile these are right now, right? And yes, we live in especially interesting times in terms of you have a presidential election, a Fed decision, and now we're getting economic data. But quite a week we've lived since November 6th, or back a couple weeks, right? Whatever it is. But nonetheless, you see the market. Okay, so the market was worried that we were going to see potentially even more inflation that would not have allowed the Fed to cut. Now that we've got the number, which is that inflation's at 2.6% for the CPI and it's at 3.3% the core, the market says that's okay. The Fed can handle that. They can bring the rate down from 4.5 to 4.25% in December, and they can probably make the case that they're still restrictive. Now, Chairman Powell was talking about he wasn't sure they were restricted at 4.5. He's not sure of anything. To his credit, he's leaving himself an opening where he probably should. But that's where the market is. Now, you get into these numbers, all right, a couple things to go over here. Core we have, and then you have super core, okay? Because housing was a hot number here. Here, let's go to housing first, all right? Housing. Now, housing is a much larger component of the CPI. I'm going to pull up the chart to show you, because this is why the market probably likes it as well. Housing was hot, okay? Owner's equivalent rent, which gauges housing costs for homeowners, climbed 0.4% on the month. That's up from 0.3 in September. Now, housing costs are a huge component of the CPI. So here's your CPI weighting. Housing is in yellow. There's your PCE, which is what the Fed actually prefers. Housing is in yellow. Healthcare is in red. Look at healthcare. 21% of the PCE, only 9% of the CPI. Housing, 32% of the CPI, only 15% of the PCE. Okay, I'm going to post this. I'll post it right now in the den, because you got to check this out, because the Fed loves the PCE because it's more representative of what you actually spend, because you do spend a lot of money on your health care in the form of employer-based healthcare plans, which aren't factored into the CPI. Now, on the flip side of that, 32 on the housing, it's a big number. We do spend a lot of money. What does distort things a bit is, as they just talked about, owner's equivalent rent. That's a theoretical number that you're actually not paying if you're in a mortgage, right? So that always gets distorted a bit, and housing is such a big number that you have an acceleration there. So what's the market saying? It's a long explanation, but what it's saying is maybe some of this hotness, okay, because that's what Supercore is, which we're going out next. They're going to take out housing as well. That is a better gauge of where PCE will be, because the weighting of housing is so much lower on the PCE. And yes, that is a low number, but housing is hot, man. Now, is that going to hold if we get rates accelerating? Well, we'll find out, but housing is hot, okay? But then you jump to the Supercore, which strips out shelter costs, okay, as well. It's core minus shelter, rose the least in 3 months. It's still up 0.31%, okay? The average for the year is 0.35, but you multiply that times 12, and what are you at, 3.7, 3.8? Right? If it's up 0.31% on a monthly basis, if you do that 12 months in a row, you're going to be up almost 4% when you compound things, if you're compounding on a monthly basis. Apparel falling 1.5% in October. Yeah, I hadn't even read this one. I was going to complete the sentence. It completes itself. I wonder if that's going to continue if we start taxing start taxing China, where a majority of our clothing comes from. We're going to find out. But nonetheless, so Supercore pretty low. Airfares rising 3.2% in there. Inflation I saw was down in here as well. Let's see if it's up here. Yeah, car insurance was down. Inflation. Yeah, they talk about the rate cuts that we talked about. And there it is as well. Disinflation stalling at 3.3%. Chairman Powell will spit out his coffee on that one, man. Now, they had said they're not going to factor in any theoretical policies from the coming administration, because could they? That would be unfair. They have no idea. They're not supposed to be in the business of predicting political policies. So they have to wait for what the reality is going to be versus the rhetoric. But you better believe they're going to tread lightly, folks, because they know that there could be some volatility out there. Yeah, and we got the Treasuries just under 4.38%. There it is. No, I was talking about airfares. No, we'll pull it up. Car insurance was down, but still up 14% on the year was the one I was going to take a look at on car insurance. I'll find that number. All right, nonetheless, look at it. It's continuing. The market likes these numbers, man, which is interesting. The 10-year now at 4.36%. If housing is going to be the problem, then that will be okay, because the housing is not as large of a component of the PCE. And maybe that's what the market's jumping to, and maybe the market's saying, you know what, the Fed's not going to get stuck here waiting for Trump to come in 2 months. Maybe they're going to continue with their path until they know otherwise. They're probably going to make the case they can get to that 4.25. The market thinks so. 80-20 chance as of right now that we got a cut in December, and then where do we go from there? All right, we jump around to some of the Magnificent Seven this morning as we come into that opening bell. We get Apple barely in the red with the NASDAQ off by 10 points. You jump over to Amazon shares right now, up by about 40 pennies. Tesla shares, quite a pullback. Not in the grand scheme of things, but Tesla, you're going to be up by about $10 today. And Elon, seems like he's like the right-hand man. He's going to be meeting with House Republicans as well with President Trump. We'll talk some more markets. Stay tuned. We'll be back for the opening bell.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's up by 4 and NASDAQ 100 barely in the red by 25. I got a chart of Rivian up here. Rivian up by 8.9%. We accelerate to 12.18. We back off a bit, and the news out there is that they're up on the ante with their partnership with Volkswagen. That joint venture deal rises to up to $5.8 billion. VW cars expected as early as 2027. And yeah, the first VW models to use the Rivian software and the electrical architecture is set to arrive in about 2+ years. Is that number there? $5.8 billion. So investors for Rivian, they like that. And, Jacob got my ear going on this one a little bit for sure. Because longer term, man, we talk about valuations, right? We talk about the valuations of Tesla. You talk about the valuation of Rivian. $11.9 billion. Call it $12 billion. It's easy to think about multiples when you're talking about a $12 billion company versus Tesla at $1 trillion. That's a conversation you should be having. But boy, we got quite a downtrend channel, man. You'd love to see this breakout, come back and test it. And that's what really I'm looking for. A nice test of that channel line, and we break out. And maybe this is the impetus that does it. We'll see. But nonetheless, up by 12% on that deal with Volkswagen. All right, let's check out that gold contract. Before we jump over, I got an interesting one. And look at this, man. Look at that pullback. Almost right to the 382. 382 is 25.92. We hit 25.95 on the gold contract, and that's just a pullback from where we were in June. All that did is a 382 pullback from where we were, basically to kick off July almost. June 27th, excuse me. You're trading at about 2,300. We rise up over 20% in gold to 28.01, and we've pulled back to the 382, and you have gold up a bit this morning. But how about this one from the Journal? How about 3 tons of gold? Whew, that is quite a number, man. And yeah, you got one of the biggest mother loads of gold in Latin America, and yeah, they're just coming in and seizing the tunnels and getting it done to the tune of 3 tons of gold. I'll post this one in the Tiger's Den as well, man. But they talk about 30 miles of tunnels worth hundreds of millions of dollars and a drug trafficking gang, and it's taken over it all. And the air below the ground is hot. Yeah. Pretty amazing. You talk about the numbers, but 3.2 tons of gold worth around $200 million and equal to 38% of the mine's total production. And this is Zijin Mining Group, a Chinese state-controlled company. Can't believe China's letting that happen. That's what I found myself thinking, reading this the most, right? Pretty remarkable. But hey, when gold's pushing $2,800, seems like probably a useful endeavor for gang activity in terms of where you're putting your power. Pretty remarkable. All right, what else do we got going on in this market? We talked about, this one. How about Dish? Is that it? I thought I was looking at it. Sats, right? Is that it? Sats. There it is. Let's see. That's it. We'll have to pull it up. But nonetheless, DirecTV, terminated after the bondholders weren't keen on them taking over Dish. All right, we get a little bit of a pullback. Market's up by 4. We check in on the yields following that CPI number. All right, so we've calmed things a bit. We're back to 109.26. You still have higher price, lower yield. And we check back in on that dollar, DXY right now. Back above 106. Man. Gold at 26.17. This dollar. Can't wait to talk to Teddy coming up next segment because, boy, it is looking mighty strong. And how about Bitcoin? Speaking of strong, new all-time highs just made. 91,800. And yeah, you have, so I talked about it yesterday. It is remarkable. Elon, anytime they mention Trump, they mention Elon right now. How long is Trump going to be okay with that? I say that seriously, whether you love him or not. How long is Trump going to be okay with every time Trump's going to a meeting? Elon, now he's bringing him there, okay? Elon's a star. He gets it. He's teaming up. And I'm sure he wants some insight. And he's going to attend Trump's first post-election meeting with White House Republicans. Now, the one I found more interesting is you got the Doge. Doge is back. And you talk about Doge, folks. Did you buy your Doge? be careful buying your Doge, folks. Doge up by 8.7%. I mean, let's put it on a yearly. But, yeah, you got a stratospheric run when you have Elon and Vivek now officially manning. No, that's... Come on, where are we? Excuse me. There we are. Dismantle government bureaucracy. No, Department of Government Efficiency. Excuse me. DOGE. Yeah, it's tough to keep track of everything going on with all those. But nonetheless, Doge accelerating. And, yeah, they're going to helm an outside commission. And he's been hanging out for a week. And he's going to meet the House. So, House Republican Conference in D.C., they're both going to be there. And we'll see what comes out. All right, we talked some gold, talked some CPI, we talked some Doge. Yeah, let's take a look at some equities, man. We got the NASDAQ 100 barely in the red. Not Amazon, though. Amazon up by 0.9% right now. We check in on Microsoft, down about 0.5%. Meta shares down $20 from that spike high yesterday. We're down another 0.8% or $5 at $5.80. How's Zuckerberg going to fare in the next administration? Yeah. Jump over to Google. Down about a percentage point as well. We jumped around to some of the banks. We had JP Morgan up by about 0.7% today. Bank of America up by 0.6%. Market likes it for these banks, man. Wells Fargo up 0.3%. The airlines, look at this. Delta up by 2.4%. American up by 2.7%. United up by 2.3%. Look at these runs, man. Remarkable. United almost tripling in price from where we were in August. Delta doubling in price from where we were in August. American up 50% from that low. Let's check in on JetBlue. Uh-oh. JetBlue. Man. Now, JetBlue's up 10.2% right now. What do we got going? That's quite a pop. JetBlue and American hinted a revived partnership coming out yesterday. Is that the action? Maybe it is. American Airlines, JetBlue, Spirit. Oh, no, that's, yeah. Nonetheless, JetBlue up by 9.4%. But if you just saw me go through the charts of all those airlines, folks, you know, JetBlue is... Yes, up from where you were, but we're not even at the highs of early October. Be careful on JetBlue, man. I like JetBlue, but they got a problem. Versus that's a chart of Delta. American not looking at his kind. Look at United, man. Watch out for United. $91. All right, folks, stay tuned. We're coming back with our man Teddy Kegstad. We're talking some currencies. Talk some equities. We'll talk some currencies. We'll talk some commodities. We'll talk some yields. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 3 points right now. You got the NASDAQ 100 slightly in the red, and we're going to jump over to our man Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report out every Monday morning with a new issue weekly and updates throughout the week. You can check that out under the newsletter tab. It comes with a 30-day money-back guarantee, and don't forget about the 2 webinars he's got under the services tab, Capitalizing on Time with Calendar Stock Option Spreads, and Japanese Candlestick Pattern Stock and Option Strategies with our man Teddy Kegstad. Teddy Kegstad, good morning. Do we got him, Al? I can't hear him.
I'm here.
There we go. I got you. Good morning, Teddy.
Good morning. Yeah. So, how you doing, Tommy? What do you want to start talking about with first?
Oof. I know. It's been a couple weeks. We've had a few things happen over a couple weeks, Teddy. Maybe kick things off with yields and the dollar, because that's where I find myself looking most, of course, yields and the movement there, and then the dollar at about 106. Those, of course, related. But, yeah, walk me through what you're thinking of the action, especially over the last week or so.
Okay, well, yesterday we spiked through our upside target level, which was right around this or just below where we're trading at now, and we made a higher move high today. I think we're pretty much running out of gas on this rally right now. I wouldn't expect this to become a bear, but I think we're ready for a nice little correction. You know, I think we could get every bit of a 10-15% pullback over the next week or so. You know, the reason I'm saying that is that the dollar has remained very strong. The election, you can call it an election rally, but I think it's really more due to the fact that yields have stayed higher, and they topped out last week. You know, we've been going sideways over the past few sessions. They're not retracting, but they're also not increasing. You know, and I think that this dollar move is more interest rate driven, you know, yield driven. And I think also the fact that, you know, we do know that the Fed's going to cut again, most likely at the next meeting. In the next couple meetings, they're probably going to cut a quarter point, you know. So I would think that you probably have every bit of a half to 3/4 of a point that are going to happen over the next few months, the next few meetings. And at least right now, as long as numbers are still at the rate that they're moving right now, as far as CPI and PPI and the inflationary numbers, I'd watch the unemployment number. I think that's claims, you know, tomorrow. I think that's going to be a big deal. Unemployment is still going to be a big thing. If we see a lot of hiring, you know, and also job growth, which we already heard, certain companies now, they're pulling back out of China, especially since the Trump election. I mean, John Madden's moving their shoe factories back to the United States. I know that's just one company, but the reality is it's happening already, So, and that's going to mean what? More hiring. Ford already announced too that the layoffs that they were originally intending, that now they're tapping the brakes on that one. So I mean, this would mean that the Fed will be a little bit more restrictive than they were probably leaning when they started this cutting cycle, if you will. I don't see them being overly aggressive, at least until after Trump is inaugurated, until February or March, and see how things go. I think you're going to continue to see quarter point cuts. But like I said, I don't think you're going to see them overly aggressive, because they know that unemployment, which they want to see high, they want to see people out of work. Well, the reality is, guess what? People are going back to work, So at least that should be what we see over the next, 3 to 6 months, and if that is the case, that's a heavy fundamental that's going to be weighing on yields, So I don't think you're going to see. We could be in a big range trade, to be quite honest with you, with yields over the next few months. I think that, we had this conversation before the election that in this new cutting cycle, the market's not going to lead it. The banks are going to be making, and they may not be doing as many loans because yields are staying high, but their spread is going to be much higher. Their margins are going to increase no matter what, So, I think that as they cut, some more, is home buying going to increase? Once again, the market's dictating higher yields. As long as yields don't retrace at the rate that the Fed's cutting, that percentage of expectation, I think, that was in the market is going to be a little bit of a letdown, So it'll be interesting as far as, I think that if I'm right on this and yields are kind of capping out, especially because we have another cut coming, so they should retrace a little bit. And if that's the case, the dollar should fall back under pressure. So I'm leery of being too much of a bull where it's at right now. I'm not bearish by any means, but I'm definitely looking for a nice profit-taking slide.
And that was a great walkthrough, man. I appreciate it. And you've walked, I thought of you even this morning and as this dollar has approached, because it's quite a range too, right? You've talked about even, whether it's the euro, the range we've been in for a couple of years, and I have even the dollar, you're talking about 100 to 106, which is pretty remarkable when you're talking about 2 full years. And yeah, it's 6 points. And then the euro US dollar, of course, just inverse that of the dollar, and there's more to it, of course, but it is interesting in terms of that range, and we'll see if we go forward. I was talking about everybody does it on the campaign trail, rhetoric. Where's rhetoric going to come to reality? And we'll find out how Chairman Powell, but I think you're right, and he said at his press conference, it would be a wrong move by him to try and predict what's going to happen, but for any politician, so that maybe they wait and we'll see what happens, and it's going to get interesting when we start seeing. What about crude? Tying into, another administration. Sure. We talked about this, 67.23, man. What do you think about crude? Talk about drill, baby, drill.
Yeah, well, that's, before the election a couple of weeks ago, last time I told you, I'm like, it's going to be a pretty simple layup on this one. If Harris was to get elected, right now we'd already see an uptick in gas prices, and we'd be on our way towards $75, $80 on the way to 100. With Trump now coming into office, now he's got to be inaugurated, so there's some things will not be enacted until, January, but we know on day one, they are, the transition team, I'm sure, will be dealing with people in the oil sectors, letting them know where their plans are and what they're planning on doing, and I know that they're preparing to start turning things back on, and remember, these things you don't just flip a switch in the oil industry to turn things on and off. So you got to figure that they're gearing up for, come inauguration day, that they're going to be ready to go. So they got a couple of months to start prepping, getting things going. So I think you're going to see the oil services industry start to heat up, and if that's the case and we start seeing things, I think you're going to see, I think we're in a sell rally forecast for crude. I don't see us getting much more above $75. If there is, I think it'll be a spike. I think if anything, we're going to see crude continue to push down towards $60. I mean, is it going to see 50? I think it will, but not until next year, but I think we are on that trend now where I think that you have to look to sell rallies and be careful buying into breaks, because we may spike pretty low. I think we may have a nice Christmas gift. I mean, pumps, you can see it at the pumps already. literally within just 1 week, how much gas is retraced. I mean, we're looking at $1. I don't know how it is in Florida, but it's literally $1 in Chicago. I mean, that's a big move for oil. Oil hasn't gone down that much in price per barrel, but at the pumps, that's a big deal, So, and if that's the trend and that continues, yeah, I like it. I definitely think that the crude oil market is definitely in a bear. I mean, we hit a key level today. We're on our downside breakout level. We closed below that today. Yeah, new lows.
I like it. We can all like cheaper gas prices coming at you. Can you hang with us for one more segment, Teddy? I wanted to talk about the yen and maybe some other currencies. We're going to talk a little bit of dollar yen when we come back, folks. Stay tuned. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. We're talking to our man, Teddy Kegstad. Don't forget to check out his Tiger Forex report. And let's dive into the yen if we can, Teddy. I got it up here at 154.84. What do you think about that yen, where we are?
I think it's getting kind of toppy. The reason I say that is because if my forecast for crude is correct, unless you were to see a big reversal bull rally in crude, and if yields were to stay actually very strong and push actually new highs, meaning lower prices, then I could see maybe seeing some higher levels, but getting very toppy. I think no matter what, just a correction in the dollar index and the dollar itself should pull back the yen back to, like, we're trading at what, 154.80 right now, so I could see us getting back to probably around 150.5, stay above 150, on a correction right now. That would be a good support area, especially if yields stay rather firm, if they don't pull back in a big way, So like, for instance, like I said, if my scenarios that I spoke of in the last segment are correct as far as how yields are trading and how oil is trading, if that is correct and it stays in that manner for the next, say, month or two, I would say that it's going to be really tough for the yen to really have an accelerated rally, but also it's not going to have a big slide. So that's why I like that 150.5 area. I'd be really surprised if it got down to 150 again without seeing a very big pullback in yields. Because oil, like I said, I don't see an accelerated slide in that. I don't see it going to $50 in the next few weeks. Now if it was to fall off, if the floor was to fall out, then I could see the yen, really catching a nice slide and get back down to 147, maybe even get down towards the lows from September. But those, I think, like I said, unless you really see an aggressive trend in the interest rates and crude, I don't see you getting that big of a sell-off. So I think what we're establishing is a big wide range trade actually for the yen for the next few months.
I appreciate the walkthrough, man, and you've walked us through in the past so often, crude, USA as a producer, how that translates to the dollar. So that's awesome. And folks, check out that Tiger Forex report. Teddy, I appreciate it, man. We'll talk to you next week.
Sounds good. Have a good one, Tommy.
Thanks so much, folks. Stay tuned for Basil. He's coming up next. I'll see you tomorrow, folks. Have a great Wednesday, everybody.